What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. Feels like forever since I posted. Hope you all have been well. I had a great vacation, but somehow managed to get sick. So currently nursing a sore throat, so you'll have to excuse my voice. But anyways, Q2 is now officially over, and it's time for my full transparency update. If you're new here, every quarter I go through an update of my holdings and basically cover what I bought or sold and the why behind it. My goal is to show you both the ups and downs, because it's not always rosy, of my investment journey as I navigate through the short-term noise. Hopefully, it does inspire you to stick with your own investment journey. I definitely try and stay focused on the long-term view as I aim to reach the $1 million number. It's a big number, especially starting from basically zero, but that's why it is a journey. Building wealth isn't usually easy, so it is what it is. Now, we already know that risk assets, so that's tech, growth stocks, and crypto, have been in the doghouse for the first half of this year. So I'm not going to spend time comparing myself to the broader market today, because we all know I'm way underperforming it, right? So the focus of today's video will be on the account progression, the adjustments I've made in Q2 and the why behind it. I'll tell you how much I currently hold total, and close with what to keep an eye out for as we get through July. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. That said, I do recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. All right, so starting with the account progression in Q2 2022. As a reminder, I closed out Q1 2022 with an account value of $73,324.12 for a year-to-date decline at the time of 19.19%, or the equivalent of $17,388.15. Q2 was even more treacherous with rising inflation, quantitative tightening by the Fed going into effect, and interest rate hikes being implemented. Add to that the Terra Luna fiasco and ensuing domino effect leading to a few companies going bankrupt in the crypto space, and you can see how my preferred choices of investment vehicles are currently not in favor. So the question is, how bad was the damage in Q2? Well, this is where the account sits as of July 9th. Starting with a weekly view, the account gained 15.88%, or the equivalent of $6,537.86. Over the past month, the account climbed by 12.65%, for the equivalent of $5,353.89. But overall, Q2 saw another decline of 27.46%, or the equivalent of $18,044.12. The lowest point in the quarter was reached here on June 13th. The account then was worth $36,761.25 and was down 44.06%. Not gonna lie, if I didn't have the full year, generally speaking, fully mapped out on what could be reasonably expected, I may have been tempted to call it quit then. The current account value sits at $47,692.94. You can see from the graph here that it's been choppy, but we're attempting a comeback after driving off the cliff in May. So Q2 has been brutal, no doubt about it, but as I said earlier, not completely unexpected. This volatility has allowed me to take advantage of some of these bear market rallies and rebalance my portfolio in a way that I believe will be beneficial to me 6 to 12 months out. So now let's talk about the adjustment I've made this quarter. In absolute terms, I reduced Tesla down to 15 shares from 25, reduced Neo down to 750 shares from 1,000, reduced ChargePoint down to 150 shares from 950. I've increased Virgin Galactic further from 1,250 shares to 1,500 shares. I increased Hive blockchains from 1,500 shares to 4,500 shares. I exited my Dogecoin position completely for now. I brought my Bitcoin back to Robinhood and increased my overall total there, and moved all my Ethereum off platform. So why did I do all that? Starting with Tesla, I actually sold out of Tesla completely to lock in my gains. The market was obviously imploding, and there was no sense in writing it all the way down. I've been using every dip to buy back in at a discount, with a stock split approaching a minimum of 20 shares. Pre-split is my goal currently. With a 3-to-1 stock split, that'll be good for 60 shares post-split. My target share count for Tesla continues to be at least 100 shares. As far as Neo goes, it's been all about getting my average cost down so I can turn positive sooner in the year. I actually took a significant loss on NEO to offset the capital gains that I had from selling my Tesla shares. It's important to note that I sold most of my shares before NEO bottomed out at $11.57 on May 12th. Since then, I've been again aggressively buying back in. My target share count for NEO continues to be at least 1,000. For Virgin Galactic, it's the same approach as in Q1. The opportunity to average down while at these low levels continues to outweigh selling out and taking the loss. My minimum desired share counts for Virgin Galactic was 1,000. These extra 500 shares that I'm holding could be worth as much as $25,000 profit once we return to all-time high at or above $50. The goal here is to continue to add and trade the stock for a small profit here and there while we're range bound under the 200-day moving average of $11.96. I really don't expect we break that resistance until spaceflight resumes early next year, so for now, it's really just taking advantage of being range bound. Charge point, it's a very similar story to NEO. I took the loss, re-entered at $12.78. I'll be using the weakness in markets and the volatility to build back up and maintain a fairly low average cost. Target share counts for ChargePoint is also at least 1,000 shares. Hive Blockchain, still the cheapest and most undervalued stock in my portfolio. I had actually taken the opportunity to further average down on this one since it was going for so cheap. Hive then did a 5-to-1 reverse split, so my share count now sits at 900 instead of the 4,500 that it was previously. The main benefit of a reverse stock split is to reduce the available supply of share outstanding in the market. In theory, the less shares are available on the market, the easier it becomes for upward price pressure to be applied once momentum returns in Bitcoin. Now, it may be a bit before this bet pays off, but with Hive representing less than 5% of my portfolio, I don't mind the wait, especially if it 10x over time, as I expect it will. Doge, I still love Dogecoin, but seeing Bitcoin under $20,000 required some heavy prioritization to be able to take advantage of that discount. So yes, I sold it all. I'll eventually buy back in, but only after I've loaded up on Cardano and Polygon sufficiently. And so on to Bitcoin. The current market conditions have brought Bitcoin down to a price point that I would consider appealing and attainable. Now, even if you believe that Bitcoin could drop further, as some suggest, to $10,000, that's another 50% decline, right? On the flip side, if like me, you believe that Bitcoin will be worth somewhere around $500K by the end of this decade, that would be a 25x upside scenario. So for me, it was a no-brainer to rebalance my portfolio in a way that allowed me to acquire my first full Bitcoin. Pretty happy about it. I'll eventually move it to cold storage with the rest of my crypto, but for now, I'll keep it in my Robinhood account and use it as collateral and continue to scale up. As far as Ethereum goes, all of my Ethereum has now officially been moved off platform. It is either invested in NFTs or being held in my crypto native wallets. With the exception of my Bitcoin, all of my crypto and most valuable NFTs are safely kept in cold storage on my Ledger Nano X hard wallet. These will not be sold for quite some time, so the extra bit of protection against scammers goes a long way. My less valuable NFTs or stuff I plan to trade near term is in my hot wallet for easy access. A lot has happened over the course of the past 3 months, and a lot of opportunities have presented themselves as a result of this bear market and crypto winter. And so now, as it stands, Robinhood is just one portion of my core holdings. After all the rebalancing and additional purchases, my overall asset holdings are split 3 ways, nearly evenly between stocks, crypto, and NFTs, for a grand total of just over 100K value. So where do I go from here? Well, I'm a bit more diversified, yet more concentrated in each of my core positions. The name of the game for me at this point is to prioritize accumulation based on which holdings I believe have bottomed out already versus those that I think may see more downside based on the macro environment. If you recall, I gave you the high-level blueprint of the themes that will drive the market this year. If you missed it, you can catch it in this video here. At the end of the day, I still maintain that most of my stock portfolio has bottomed out already. There may be a bit more downside in crypto, but the bottom is near, if not already in. And for that reason, I expect that the second half of this year will be more favorable for my specific portfolio. As far as the broader market, at this point in the cycle, it's all about inflation and recession risk. We'll get 2 critical economic data points in July. The June CPI number is set to release next week, and the GDP number drops at the end of this month. The CPI number will let us know if inflation has peaked or not, and determine what type of rate hikes the Fed drops on us. So 50 basis points versus 75 basis points. The GDP number will determine if we are officially in a recession or not. Remember that you need 2 consecutive negative GDP print numbers to meet the textbook definition of a recession. Q1 was negative, so if we get a positive number this go around, the soonest we could formally enter a recession is in 2023. And so I would expect volatility to kick in hard next week and leading up to the GDP number release at the end of the month. I mean, lots going on still and some notable changes to my portfolio composition. I personally think it's more important to become extremely familiar with what moves the particular investments you're in versus playing the rotation game Wall Street does. Valuations have come down significantly in Tesla, NEO, ChargePoint, Virgin Galactic. Bitcoin, by all relative measures, is cheap at the moment, along with most of the crypto space. To not take advantage of that and instead rotate into bank stocks and energy because that's what happens to be hot at the moment, given the inflationary background that we're in, to me seems crazy. I mean, that's what Wall Street does. I'm not interested in playing that rotation game. So the last thing I will say is this. Fortunes, again, are built in bear markets and crypto winter. Endure the short-term pain so that you can capitalize on the long-term gains, especially when the companies and crypto you're investing in have visible and quantifiable improving fundamentals. And on that note, I'll leave it here for today. Congratulations on surviving yet another down quarter. We'll see what Q3 brings. Don't forget to drop this video a like if it helped you gain some insight and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me on Twitter. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.